What's going on, everybody? It's Jeff here. Welcome back to the channel. Another choppy day inside the market. I'm going to go over some of the great plays that we had at the end of this video, but more importantly, I want to talk about AMC and what is being discussed all over the internet that has to do with shorts covering their positions. I'm going to put this into great perspective for you just to give you an idea of what this actually means. So let's get right into it. Before we do, I do want to highlight this tweet as inflation numbers are going to be reported tomorrow. This is a tweet from FX Hedge. I've been following him for quite some time, and he is pretty informational and accurate with his information. I did do a little bit of checking on this one, but it says Fed's Bostic says US inflation is broadening and it is not transitory. Warning. Bostic is the Fed president for the Bank of Atlanta, and what he was saying is that in his adjusted expectations, he's looking for higher growth to happen over the next few months, especially in the job industry. However, it is going to be paired with higher inflation, so keep that in mind going forward. Now let's get into this specific thing right here, and I'm sure you've seen it numerous times. I just want to really put it into perspective for you. So this comes out from Iceberg Research, and it says we covered our AMC short positions down 30% from our initial position, which would mean a 30% profit for them. First of all, when this first came out, this tweet first came out, we remember that MarketWatch had published an article minutes before the tweet actually came out. This was most likely a paid ploy in order to get other shorts to add onto their positions and potential some traders that really were not about AMC and the fact of playing it for a short squeeze to get out of their positions. The shorts double down and hammer the price down. That was a ploy back in July 2nd. And we knew that once it was hanging around that $50 to $60 price point. And now saying that they've covered their positions, and it all goes back and forth. Well, first off, we remember the company itself, and we did a little bit of research on their financials, some of their plays. They only have one employee, where their headquarters are out of. I mean, you take a look at their standard WordPress website. I wouldn't even give this to my local plumber. If I was still building websites like I used to do before I got into full-time marketing, I would never build something for a local plumber. Something of this category. My son could do a better job, and I even said that before on their website. Your website says everything about you. So we've already done that information. We've done the research about them and so forth. There was not any bit of spike whatsoever in the stock price to indicate that any substantial amount of short shares were actually closed. Now, maybe they did have 1,000 shares, maybe 10,000 shares, and that they might have closed out on. Sure, there's definitely, argument for that amount. However, take a look at this. This comes from MarketBeat, and this is updated as of September 30th. And we're going to see the latest numbers coming out very shortly. We are still at about almost 100,000 or 100 million shares short, and it's increased from September 15th to September 30th. We're almost around the high of that 100 million shares. Well, do you remember back in early June when we had that run up? And if you look at these two right here from May 28th to June 15th, that's when we had that massive run up to a high of about 77. I think it was 77 pre-market. And there was 17 million shares, short shares, that were closed in that given time period. And that might not have been any of, like the big hedge funds. It could have been a couple small hedge funds. It could have been some retail. All right. That could have been someone small like Iceberg Research with their 1,000 shares or 10,000 shares, maybe. Okay, but it was not any of the massive positions in the holdings. But as you can see here, 17 million shares, which at this point in time would only be about 17 to 18% of the current shares shorted, and we ran well over 100%. And retail and other individual traders got behind this until that offering was posted on the 3rd, and it led to a 50% drop. And that's what killed some of the momentum going forward. We did rebound once the offering was complete. I remember it was about midday, around 11:30 my time, Eastern time. And we did get a little run up going forward. But just to put it in perspective, when you read some of these things on the internet, that none of this is accurate whatsoever. And like I said, it could have been a tiny, tiny position just for validity. But there's no substance, there's no substantial, volume, okay, or shares behind any of this happening. So keep that in mind going forward. All right. Last thing I want to talk about before we cut on a wrap up is some of the plays that we had today. It's pretty amazing when you get to see the market that shifts away and it changes into picking up these runs because the buying pressure behind some of these stocks was absolutely amazing. This one right here was Nutriband. They signed an exclusive agreement for a COVID-19 indicator patch. I said already paid the group pre-market when I wrote this. We had some on this. I said look for ads at 10 or wait for the rip above 11.10. That one was great. BBIG did it great as well. And then the next one was GWH. This was a Bill Gates backed SPAC. And I said that it was a SPAC. So be careful going into it, because ever since CCIV happened, back in February, when it had that massive run up above 60 and was just as soon as the rumor was confirmed that the merger was going to happen with Lucid Motors, CCIV just absolutely tanked and went all the way down to somewhere around in the 20s. So keep that in mind. But I said to everybody, I said, if you can get ads above $14, you're going to ride up. It ran 100% today. And lastly, I said this too, as I suggested that we didn't hold anything overnight, is that, the SPY was recovering as expected after the cliff walk, but expect it might get heavy going into close with everything happening. So as you can see right here, this was the number one GWH, broke above 14 pre-market, went all the way up to 29 going forward. Like I said, it'll be interesting to see exactly what happens with this Bill Gates SPAC. Nutriband was another one. We waited for it, got above 11.10, got that 50-cent pop that I expected. Continue to get ads all around the $10. If you're new and you're still having a hard time understanding plays or understanding reading charts, this is a perfect chart, that pattern that you can look at of where you have solid support at that 980 to 990 level, and it becomes a heavy demand zone where as soon as it dips down into that, there's buyers ready to step in and scoop those shares. So keep that in mind going forward. This is a good chart for anyone to study if they're trying to be able to identify possible ads, and you don't want to add way up here when it's already at $12 and it already made its run. You want to get it around that $10 range. Take a look at this chart, study this chart. You can use the on-demand feature on Thinkorswim to go back and let the stock actually play out as it did in live terms, just to give you a better understanding. You're watching volume, you're watching the level twos and the time and sales coming through. This was another one, BBIG, which has been kind of giving us back and forth. It give us some runs, we would take some profits, let it come back down to support, and give us some other ones. So this was over a $5 ad. And it's got about 30% on your money. So that was another one going forward. I'm really loving playing these quick plays. As far as AMC, it gave a push going into the close. It had two yanks coming back down and didn't really get to close green. Down just over 1%. We're still channeling very nicely between that $36 and $38 level. And I want to see exactly what volume closed at. This might be another record low. Last time I looked, a few minutes before I started making this video, we were at 23 million shares traded. So it's getting much tighter. And this is, like I said, when you don't see that price diving down with this, little bit of volume, there's strength behind it. And that's exactly what looking at all this, tells me going forward. Lastly, this was SPY. I think it did finish its kind of dip going into the close. It actually had a little pop and then kind of sold off right after hours. But keep an eye on that going forward for the market. If we look at the daily chart, just to give you a quick update, we're still bouncing off that trend line, and now we're looking to make potentially lower lows. We make lower lows and get below the close, about that 428 mark, you could expect another dip going down. So those numbers tomorrow are going to be very, very important. Last thing I'm going to cover about earnings, which is kicked off by the big banks, is this Q3 is going to be also important for anybody that sells goods with the supply chain issues that everybody is struggling with, not only from the labor force, getting materials, the production of the materials, the delivery of materials. It kind of runs full circle, and the entire supply chain is struggling. So keep that in mind with any of your positions going forward. So that's it for this video. I'll see you in the next one.